All right, welcome to podcast episode 7. We are today talking about our favorite nerds, the CPAs, and I've got one of my favorite nerds here. Chris, I'm sorry I have to call you a little bit of a nerd because you are business through and through on every aspect. But you are obviously a CPA, and we'll get into your introduction a little bit. But for me, just to introduce to the whole audience, Chris is really special to me because I guess we've known each other, 25 years now. He was my first business professor and advisor. And that's really hard for me to say, 25 years, because that represents a lot. But here we are.
So as well, it means I'm getting old.
Yeah. We both got some gray in us at this point in time. But we've had a lot of experience and stories and things that have happened over the last 25 years. And so I'll hand it over to you to do a quick introduction, and then we'll kick off into our topic today.
So Kristopher Blanchard, I'm both a CPA and an educator. And so I've been in higher ed for longer than I care to admit. And I did. This is commencement week. I actually introduced one of our adjunct faculty at an event 2 days ago, and that was one of my professors. So I kind of understand that, and he didn't want to admit how long ago it was either. So I totally get that. But prior to getting into higher ed, I owned a tax practice and did some business consulting focused primarily in nonprofits. And then over the last 20 plus years, really have focused on how do I help my clients and business people learn the information they need to be better decision makers. Because it's not, you don't want to have to go to somebody and always ask permission. That no one likes that. So if I can help them understand the tools they need and how to interpret information so they can make decisions for themselves, I'd rather empower my clients and my business owners to do that for themselves.
Yeah. As you're talking here too, I have to say, I don't know if you remember, but accounting was not my thing. I think I had straight A's in school, except for accounting, which was straight D's. And I'm lucky that I did that. I remember staying up late and then getting to class and being like, I still have, by the way, at 42 years old, I still have dreams of accounting class and showing up at accounting class at the end of semester. And at the end of semester, I had forgotten to do all my homework and forgot to show up to all the classes. And I was taking the final exam. This is a recurring dream that I have still to this day. I probably have this dream once a month, by the way. This is a lot. So that's the lasting impact accounting has had in my life.
Sounds a bit traumatic.
I could say you gave me some nightmares here, Chris.
Yeah. Does that dream include the accounting cheer?
No. It literally is me forgetting to go to class, forgetting to do homework, and now I'm stuck here with a final exam thinking, am I going to get to move forward or not? So
that would be a nightmare.
Yeah, it is a nightmare. But the cool part about that, and I think that's a fun story to talk about as we go into this. But the reason I bring that up is I've learned that in my role in business, I don't have to be the expert at everything. I don't have to know everything. I have to know enough to be dangerous. I have to learn enough to know how to make good decisions. But there's been many times over the last several years that I've gone to you and I said, what do I do now? Or I've got this decision in front of me financially. How do I make that advice? And so I want to start off this conversation really with a simple question, which is, what is a CPA and why does it matter to a small business owner? And when we say small business owner, we could talk about brand new entrepreneur starting up with a brand new business in the first year, or someone that's got $3 to $5 million of revenue, or maybe even more. But the impact and importance of having a CPA, I've seen it. But what is a CPA and why is it relevant to them?
So CPA they're a certified public accountant. which means that they're licensed. They've gone through a licensing process that includes taking 4 really difficult exams, completing over 150 hours of education, and working for at least a year under a licensed CPA. So that's what it takes to become one. But as far as what do they do and how do they help, there's really a variety of CPAs out there. So it's not like one size fits all. It's kind of like attorneys. You've got different types of attorneys. You have different types of accountants, the CPAs. So some are going to be just your tax preparers. That's what they want to do. They get really excited about taxes, and they just want to be transactional. They want to, you give them the information, they'll put the tax return together, and then they're on the way. And I'd say that's kind of a basic level. Some really like audit. I am not one of those. I'm not an audit person. So and when we
details are not fun.
Yeah, well, it's not just details, but it's like, you have to get all the documents and did they do this correctly? And that's, we need audit to make sure businesses are doing what they said they are. It's compliance. But that's not what I want to do, so I don't practice in that area. And then you have the other side, which is more strategic advising in a whole variety of ways. And for me, I want to practice at the top end of my license, which is more strategic advising, thinking through CFO type questions, everything from what type of business that are you going to start. And we're not talking about what you're going to do, or are you going to be a sole proprietor, a partnership, a corporation, or use a hybrid like an LLC. Which one's best for you? Yeah, and that gets down to nitty gritty, and you have to think through long term. So why would a business owner? So if you're thinking about starting a business, you can go to an attorney, and they'll probably say, "Hey, an LLC is the easiest. It's the most flexible. It'll protect you liability wise. That's great." But attorneys don't always talk to you about what does it mean on the tax side and how's it going to impact your pocketbook at the end of the day. Yeah. So I'd say that'd be the place you'd want to start talking to CPA, is do that side. And attorneys, unless they're tax attorneys, they'll tell you that's not what I do, because we have to stay in our lanes. So.
Yeah. Which brings up actually a really good point. Yesterday I was meeting with a client. As most know, I do a lot of strategy work myself. I love the strategy. I probably learned that from you in school. I remember certain things that you would help us learn that was a lot more thought focused than just book focused. And, so I go down the strategy path, and I'm meeting with a client yesterday, actually, and we were talking about acquisition. So surprise, you're about to have someone reach out to you in the next week about a potential acquisition that they have in front of them, and how do we structure it? And when we talk about acquisition, I think most of the time, business owners think, oh, I'll just buy this, and now I own this. And there's so much behind that. There's, from the finance perspective, this is where I love to play, is how do we structure a loan and what's involved in that, and how do we put all the pieces together? But of course, then there's the impact on the tax side of it. And so people like you and I like to work together, because I like to get creative and come up with really fun options. But the reality is it may not be the best long-term impact. So can you talk a little bit about acquisitions in a small business world? Some of the things that you look for in an acquisition, some of the things that you might want to see, and how you might structure those differently based on different types of acquisitions, so that people understand that.
Yeah. So let's say for some strange reason you're wanting to move to Northeast Iowa and buy a winery. Not that anybody would ever want to do that.
Just to preface, I almost did this. I almost bought a winery. What was this, like 10 years ago?
Probably 13, 10.
And I'm pretty sure there was llamas involved.
They did, yeah. There were llamas. No, llamas.
There was llamas and a bed and breakfast, like a bed and breakfast, llamas, and a winery somewhere in the middle.
Somewhere in there. So if you want to do that, then okay, you have to sit down at the very basics, at the foundational level. What are the assets you're buying?
Yeah.
And say, okay, what are the assets that we're buying, and then how are you going to use them in your business? How do they fit in your business?
Yeah.
And do they fit in your business? Because if you're buying something and it doesn't fit, then you have to go, what am I going to do with it? Right. So how do we get rid of it? So, and from there, as you start looking to structure the deal, it's okay, how can we get creative to protect not just you as the new business owner, but when somebody's selling, they probably are going to have capital gains, and you don't want to pay those all at once. So how do you structure a deal in a way that's going to be tax beneficial to them?
So we had a quick minor interruption here, which was fun. A client walking in who actually needed a CPA, which is of all things the coolest.
I would say every client needs a CPA, but that's me.
That's right.
Biased. Yeah.
So I think we were talking about assets and how they play in, and when you go to sell later, how that impacts the sale later. So I'll let you continue.
Yeah. So depending on how you want to structure it, you really have to come down and say, okay, what do I need, and get those things. And for some clients, in some situations, you need a cash infusion, large cash. So then that's going to be an all cash deal.
Yeah.
Or in other areas, it might be, I want to slowly, if you're a business owner, they want to slowly retire. So finding a way to structure them out in a way that honors them and helps them reap the rewards of their hard work. You can structure it that way. So it really comes down to just good communication and talking through those systems. And when I mentioned systems, that's the other part of an acquisition is if you're buying an existing business to merge into your own, all right? So if this is for an expansion situation, taking the time to look and say, okay, are our cultures compatible?
Yeah.
That is going to be huge. And you can go through major business, mergers throughout the decades on why these failed. And a lot of them come down to culture issues.
Yeah.
And then if you are merging two companies, you have to realize you're going to have two of everything. You're going to have two bookkeeping departments. And are you prepared to
reduce,
lay people off? Yeah.
Yeah.
So these are all the questions that as you go through these processes, you need to start thinking about.
Yeah.
But a lot of times what we do as business owners, we see, hey, that looks like a great deal, and we just want to jump in head first, and we forget to check and see if there's water in the pool. And so
so what's interesting, I think this also leads to a really good conversation that a lot of business owners, I never thought I'd talk about this, by the way, Chris, but your balance sheet is obviously plays into an acquisition, their balance sheet and your balance sheet. But then your profit loss, knowing that you can go back and see 3 years, but also be able to project it ahead 3 years and forecast, what is the impact and when do we see this growing and all of that. But one of the topics that I talk a lot about is the difference between profitability, gross profit, and EBITDA.
Mm-hmm.
And what that looks like and how that impacts even the tax world. So I'll have you break it down a little bit. What is gross profit? What is EBITDA? And why should business owners care about both of those?
Well, actually, you mentioned balance sheet, which is the foundation.
Yeah.
And I mentioned the accounting cheer earlier, and I don't know if you remember or not, but in Principles of Accounting, every day for the first 3 or 4 weeks when I teach it, we do an accounting cheer where we come in and I start off and I go assets, and everybody yells.
I don't remember this. And don't put me on the spot.
I go assets, and you say assets.
I'm not doing this, Chris.
Oh, come on. This is what this is exciting stuff. This is what accountants do.
This is why we call this podcast, our favorite nerds.
Yeah. And I always threaten them and say, if you don't do this, we're going to get people up here and they're going to do A.
Oh, you know what? I do remember this. Now I threaten people with those kinds of things.
Yeah.
I got it from you. I forgot. I blocked that memory.
Most people do.
Yeah.
But it starts off, the foundation is assets equals liabilities and equity.
Yeah.
Those things have to balance all the time. So when you start looking at that, how do you structure your business, right? And understanding what an asset is, something that's going to help you in the future.
Yeah.
Understanding what a liability is, something that's going to hurt you in the future, or you're going to have to pay back. And then you get into equity. And I always talk, equity is sweat equity. The more you sweat, the more equity you have, the more you work. And work is where you get into that gross profit thing.
Yeah.
Your revenue minus your cost of goods sold, whatever it costs you to do whatever it is that you're doing.
Yeah.
There's your gross profit.
And it's so simple. Like, I'll stop you really quick. This took me so long to understand, even after going through school. And it's so simple what you just said, but I don't know if everyone necessarily understands that your gross profit is as simple as how much did you sell something for and how much did it cost you to produce it. All the other expenses that it takes to manage your business is not played into your gross profit. And, I will ask a quick question. I know what I like to see. I typically like to see a gross profit of 50 to 55%. I'd love to hear from your perspective, like what percentage you'd like to see typically. And it varies by business, but if you had to look at a high level, what you typically like to see, I mean, you don't want a 20% gross profit. That's not good.
Well, and so that's my favorite answer generally is it depends.
Yeah.
It depends on the business and everything else. But yeah, it is that simple. It's just, okay, what did you charge? What did it cost you to get that? And then what's left, that gross profit. And the reason it's so important is that number pays everything.
Yeah, everything else. Yeah.
Everything else in your, like, you want to get paid and you don't have enough gross profit, you're not getting paid. You want to keep your lights on?
Yeah.
You're not going to
keep
your
lights rent? On. You want a mortgage? You want anything? You need gross profit.
You need gross profit. That's the number one thing. And that comes down to two things. What do you charge?
Yeah.
Your price. So understanding what your price is and what you're paying. Those are key things. Now, what should that number be? Depends on your business. If you're talking a fast food business, generally you're looking primarily food and labor. You want to keep that around 50, the combined around 50%.
Yeah.
So yeah, it's a good number.
Which means your labor costs can't be up there. So, I mean, you've really got to manage these things.
You do. If you're talking more of a service-based business, your gross profit should really be closer to 70 to 80%.
Yeah.
Because
and when you say service-based, what do you mean?
If you're in the IT service area, you are going to have some direct costs that you can add in there, but those are going to be smaller. And the reason that you need a smaller cost of goods at that point is because you're going to be investing so much into technology, so much into infrastructure.
Yep.
Your nets, you're still going to come in at a net probably 10 to 12%, 10 to 20%, but
yeah. So what's the rest of it? So you got gross profit, which is above the line. Below the line, you have a whole bunch of other stuff. What's that?
Everything.
Mortgage, utilities, business insurance, your salary, salaries of overhead.
In that, everything, it depends as well. It depends on the type of business you have. Yeah. So when we talk about mortgage, the interest part is included.
Yeah.
Not the repayment part. So you break those out. Utility bills, payroll of your employees. Now, if you're a sole proprietorship or a single member LLC, then your salary doesn't count because you don't include that there. But right, so you have to look at some of those things. But pretty much every other expense that you have, advertising, marketing, all of that goes in there, and it comes to this number: earnings before interest, depreciation, and taxes, EBITDA, or earnings before depreciation.
Which is a fun word. Everyone talks about it in big corporate now.
Oh, everybody's talking EBITDA, and what you do is when you're in those meetings, if you don't know what it is, you just kind of EBITDA.
EBITDA. Yeah, everyone.
Everybody, yeah, we EBITDA all the time,
Yeah.
and you just nod knowingly, and because you don't
Yeah.
want to say what's that, right?
Yeah. And then there's adjusted EBITDA. You really don't want to know what that is. But at the end of the day, it's simple. It is as simple as like cash. It's cash.
It is cash because it is before depreciation.
Right. Right.
And so when assuming you're on a cash-based system, if you're on accrual, it's not accrual. It's not true cash, but
sure.
Essentially, but let's say you're cash-based before depreciation. Yeah, that's what you're looking at. And that's how much you have to invest in your business, right?
Sure.
Sometimes we call it free cash flow. It could be another way to look at it.
Sure. I always say it's cash before the CPAs do their fun stuff.
Right, because then what we do is we put in your depreciation, which lowers your earnings. And I was on a board for first board I was ever on as their treasurer. There were 4 people. There was a preacher, a prison guard, a plumber, and me.
Oh my gosh.
It sounds like a bad joke, doesn't it? There's a preacher, a plumber. I'm
literally sitting here thinking, what's the punchline?
Yeah. And every month we would do this. They would ask me, say, so what's this depreciation thing? Like, why is it so much? How do we get rid of that?
Yeah.
Yeah.
It's interesting. So these when we talk about gross profit, we talk about EBITDA, we talk about acquisitions, we talk about the balance sheet, we talk about all this stuff. For me, obviously, I get really interested in this because this is how we either grow your business and do you have the cash, and cash flow is a whole nother thing in there. Like you said, like, if you're on an accrual base, you can invoice all you want and have all this. It looks like you have a bunch of cash, but you haven't actually received it. And so you got to play all these things together to see what you can actually do. Banks look for certain things too. So we're talking about to me, when I think about business, the importance of a CPA is not just taxes. I'm thinking about how does a CPA help me structure the deal for taxes, but also like, how do we look at this so that it plays well into the finance world? If I need a loan, if I need banks to play in it, because they're looking at certain things, they're looking at certain numbers. If I'm looking at my cash and how this impacts my cash flow, my employees, all of that. So can you talk a little bit about and I know you mentioned earlier, there's different types of CPAs, just like there's different types of attorneys, but can you differentiate for businesses that are looking to grow or they're looking to acquire or maybe even sell at some point in the near future, 5 to 10 years from now, the difference between a CPA that's just doing your taxes and a CPA that's helping step alongside your strategy, and why that's important to bring in at the beginning?
Yeah, the having somebody that is more advisor based is going to be really important. So for a small business owner, and generally your advisors you're going to either have I'm more of a general strategy advisor when I work with clients. So I work with one of my clients makes gaskets for NASA.
That's pretty cool.
So they're literally rocket scientists, right? And which is fun. And then I've got another client is a fast food company, and then I've got another that's a dog grooming, right? So I've got all these small businesses that are totally in unrelated fields. So I have to be more of a generalist.
Yeah.
And focus on basic things like, okay, what are we looking at generally? So I'm able to do more broad-based strategy for them. So if that's somebody, that's what you'd want to look for, is a more of a broad base. Now, my sister, who's an optometrist, she's not my client. She has a CPA that only does optometry work.
I can see that, by the way.
Can you? They're good. You didn't need the big letters.
Yeah. It's good fun. All right.
Yeah, no. And she keeps telling me I'm at that age where I need readers. And I'm like, why? I just make the font bigger.
You need to respond and say, well, you're in the point in your business where you need a CPA.
Well, she has one, but all they do is optometry.
Taxes. Yeah.
No, optometrists. So they're very specific. And here's what other optometry practices are doing. Here's what their guidelines are, rather than more of the general. So as your business matures, you're probably going to want to go from a generalist to somebody who's very specific in your field. So does that kind of answer the question as far as?
Absolutely. The next question, though, is for business owners, especially the startups, or you're in your first couple of years, when do you bring in a CPA to partner alongside of you? Like, when is it important to bring them in?
Day one.
Day -10.
Yeah, really, before you even start, because again, we want to be an LLC. Great. I love LLCs. They're a hybrid organization.
Sure.
And the reason they're hybrid is the IRS doesn't know what it is.
Yeah.
So that means you have to tell the IRS what it is. And if you don't, you can have negative tax implications. So bringing a CPA in to talk about what your long-term goals are, right? Yeah. And when you're going to make those shifts. Also, one of the clients I'm working with right now just started his business in August. And he's like, okay, I'm going to put myself on payroll. I'm like, well, why? He goes, well, I put all this money in our business account. I need to pay myself. Well, all the money you put in your account was from you. It's investment. You've already paid tax on it. If you're paying yourself a salary now, you're going to pay tax on it again. Do you want to pay tax on it again?
This sounds so familiar. Is this person me?
No, it's not you. No, actually, it's my neighbor.
Wow. But it's
like,
a common theme, though. I mean, like, you want to start a business, you infuse your own money to start the business. And how do I pay myself? When do I pay myself? What does that look like? I mean, there's a lot behind this.
There is. And so if you want to pay taxes on the same money twice, go ahead. If you want to avoid doing that, talk to the CPA beforehand.
That's awesome.
And then have them help you structure things and say, okay, this is when we need to make these specific moves.
Yeah.
So
what is one of the biggest mistakes you see brand new entrepreneurs make when they're starting their business and they're kicking off in that first year?
Not thinking about their entity.
What do you mean by that?
So not thinking through what kind of business structure are they going to really be?
Yeah.
And because a lot of times, again, you just Google it, use Chat GPT or Claude or Gemini, what's the best? Sure. And
yeah,
it'll tell you LLC. From a legal liability perspective, I agree. But when you start hitting a certain level of income, the self-employment tax that you're paying on all those earnings, if you're a disregarded LLC, disregarded entity, which means single member, or you have multi-member and you're a partnership, you're paying all this self-employment tax that you can't write off. You can't use as a business expense. So all of a sudden you're paying a lot more and you have no tax area. So that's probably the number one thing I see, which really comes down to not having a conversation on what the business strategy is.
But it's not too late. If they start, there's ways to adjust, there's ways to fix. When it becomes too late is when you complete the year. And now you've got the year done and you are already in a certain spot, right? Or is there a way to correct it even after the end of the year when you're doing your taxes?
There is a way to create it to do it even at the end of the year, just as more work.
Yeah. But it's worth it because you can save money. You may pay a CPA a little extra, but you're going to save money on your taxes.
Right. It does take a little bit of time on that. So, and it's a little bit more time. So you're going to have some delays and possible penalties and things, but you'll still probably save money overall.
Yeah.
So not even, if you're in year 2 or 3 and you've been doing this and like, man, my taxes are so high. And now what? We can still go back and change it and make that election. It's easier to do at the beginning of the year, but even now you could go back and change it. So that's one of those things. But I've got an agriculture company who wanted to be a Schedule C, which is a LLC, wanted to be a disregarded entity, and thought that would be best. They do microgreens for salads and stuff.
That's pretty cool.
And I kept saying, this is better as a farm LLC than this. And didn't really. Now I'm having to go back and redo everything for last year because they finally realized, oh, you were right. And,
I have people tell me that all the time. Dave, you were right. So I'm glad to hear that you do the same thing.
like, I'm going, yeah,
Chris, you were right.
if you listened to me the first time, I wouldn't have to redo it, but I'm going to charge you now, so I'm okay.
It's awesome. All right, I'm going to wrap it up with a simple one. And this is a good question, I think, for anyone in the day-to-day world. Let's say you get to the end of the year, you're doing quarterly taxes, or you're helping them whenever it is throughout the year. The reality is there's a lot of transactions happening in business day to day. What is the importance of having good bookkeeping, and how does it impact what they're doing? Not just when they're doing taxes, but just day to day, so that they can have, what they need.
Yeah. So this is something I do here at the university as well. I'm in charge of academic operations, and the decisions I make here are only as good as the data that I have.
Yeah.
And right now we're changing our information system because the one we have is held together with bubble gum and duct tape.
I like it.
So I can't get information that I need in a timely fashion.
Yeah.
So if you are like, oh, I'll do my books at the end of the week or the end of the month, and you need to make a decision today,
yeah,
you're using old data.
Yeah.
And you're not going to be able to make the decision that you need with relevant information. So keeping things up to date. Now, do you need to be up to the second minute? No, but I'd say up to the day.
Yeah. Well, and I always say that if they have a good software, a small business, QuickBooks is a great one. I do QuickBooks online just because I've got my phone. And then in the morning, I connect my banks. I connect my where I'm receiving money, whatever that might be. And it helps me because every day I'm matching transactions. I'm adding transactions. I've got everything set up where I need to roll. You as my CPA may think, oh, Dave, you didn't set it up correctly. But at least my transactions are in there, and we can always adjust them and clean them up. But if you get your books set up correctly, managing it day to day, it only takes 5 to 10 minutes.
It really does. Yeah. And QBO it's the one that I have most of my clients use.
Yeah.
There's others that I've been experimenting with here with some of the really, really small clients, and and they work well. They just don't have the things like the mobile connection to the phone, and it gets a little bit to be a headache. But QBO is probably the easiest one and most likely used out there.
Yeah. Awesome. Well, we'll wrap it up with the last question. Is there one piece of advice that you would give to any small business or entrepreneur wrapping this up?
Yeah. Be passionate about what you do best, and then don't feel like you have to do everything by yourself.
Yeah.
One of the things that I discovered throughout my education and everything else is it's a great book, Strength Finders, and
I've done that one.
I tell you, that was the most freeing thing for me ever.
Yep.
It was so liberating because I went through and found out, hey, here's my strengths. And then there's these are the things you're just stupid at. And I'm like looking at those things I'm stupid at going, but I do those.
Yeah. It's not very well.
Right. And I went, wait a second. This gave me permission to stop doing what I was stupid at.
Yeah.
And focus on what I was good at. And man, are my strengths. So as a business owner, I'd say be passionate about what you do really well. Don't feel like you have to do everything.
Yeah.
And bring others alongside you that will help balance those things out. Now, they don't have to be full-time employees. They can be consultants. They can be friends. They can be in the network that you're building here where you bounce ideas off of.
Right.
This is huge.
Yeah, it is. That's one thing that I've learned. And I always say that I like to bring people together to do cool things. Like that's like what my passion is. I am not good at administration. I am not good at details. You do not want me reading anything because I read the first line if you're lucky. of a paragraph, and then I don't read the rest of it, which, by the way, I've passed on to my son. My son is the same way. When he's doing his homework, I'm like, okay, well, I've passed along this thing to you. But, that's why you bring people along that are really good at details, or people that are great at proofreading things, or, I'm not good at accounting. Clearly, I got a D in accounting. Now, I love the strategy behind the numbers and what we can do there.
Yeah.
But, I don't know the ins and outs of I still don't know what a debit and a credit is. I shouldn't admit that one. But
oh, it's left and right.
But I always tell people, like, it's okay to know where your weaknesses are and leverage people. In fact, it's going to cost you more to do it the wrong way than if you would just bring someone along that can help you do it the right way. And that's what their passion is. And they'll do it fast and well, and it's worth it. So I love that. Well, Chris, thank you so much for your time. I really appreciate it. I can't believe that 25 years later, we're sitting here doing a podcast about CPAs. But here we are.
I can't believe that you're in business, because I remember when we met, you said, I don't want to be in business.
Yeah, I was going to be a musician. Remember, a rock star?
Yeah, that's what you told me. You're going to be a rock star, and and then we changed your major, and 2 years later, you were back to be a music business major, which was great.
It was great. And in a couple of weeks, I get to go to Muscle Shoals to record an album. So I still get to play my music, but I make money doing it.
You found the way to do it exactly what you should. You found your passion, the music.
Yeah, I do that for fun.
Found how to pay for it, business. See?
Yeah, that's right. Well, Chris, I appreciate your time. I know everyone here will benefit from it, but a quick shout out. If you ever need a CPA that is more strategic with you, that's not just doing taxes, Chris is an amazing person and has helped me through the years. I know he's helped many businesses and obviously thousands now of students get up and going. And a lot of them are very successful business people at this point in time. So reach out to Chris at any point. He'll be in our network as a partner. So you can get into our circle community, Wayfinders, take a look at it, and message him.
I appreciate it, and appreciate your friendship and partnership for all these years too.
Yeah, maybe we'll buy a winery at some point in time in the middle of Northeast Iowa.
Or why don't we just stay in Missouri? It's warmer down here.
Well, I appreciate it. Thank you, Chris. We'll talk soon.
All right. Have a good one.
See ya.